The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
A make-or-break day for the AI trade with Nvidia set to report earnings in about an hour and 7 minutes time.
Wait, no, hour and 20.
Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. Happy Nvidia Day. It's going to be pretty exciting. Let's get you set up to the closing bell. So again, we have this meeting in the market where the future is moving higher. Then throughout the day, we continue to fade. And now you have the S&P down 0.2%, the NASDAQ down 0.2%. Nvidia holding in here, up by about 2%. But the stakes obviously quite high. And Nvidia hasn't been down into an earnings report since 2022. And it has been down the last few months. And Romaine, just want to point out a little bit of movement to the back end to the yield. We have yields down by 4 basis points as some safe haven buying has picked up as stocks rolled over.
Yeah, the price action really is interesting because about an hour into the cash session today, it really looked like markets were poised to recoup a big chunk of the losses from the previous 4 days. But that dip buying, it peaked just before noon on Wall Street. And a lot of that really does have to do with the big uncertainty surrounding the earnings tonight from Nvidia. Here are your numbers. Analysts on average, they're expecting the world's largest chip maker, yeah, it is the largest, to post revenue growth of 73% for the quarter. But that's a deceleration from the roughly triple-digit growth in each of the previous 6 quarters that, of course, was fueled by that boom in AI spending. But it's really going to be CEO Jensen Huang's forecast that matters most, particularly after DeepSeek's January surprise prompted corporate clients to reevaluate just how much they were actually spending on that technology. And complicating that trade today will be that we're going to get some earnings from some of those big corporate spenders, including C3 AI, Snowflake, and Salesforce. With Salesforce in particular, investors are really going to be keen to see whether the software company's customers are adopting its new AI product. In fact, Salesforce shares, they're actually predicted by options traders to be just as volatile as Nvidia's when those earnings hit tonight, creating the potential for a big payday tomorrow, Alex Steele, or an even bigger loss.
Really interesting on that. The only difference is, of course, Nvidia has a larger market cap weighting when it comes to the S&P. Now, here's a great chart that shows how much of Nvidia's market cap has moved on earnings days going back about a year or so. And we can see there are some big ones, right? 184 billion, 277, 218, and then the down draft of 200 billion. Now, if you take a look at Nvidia's price move on the options market, anywhere from 8 to 9%, 10% move up or downside, Romaine, that could be a $300 billion move in the market cap. And Citi is saying that the S&P options are looking at about a 100 basis point move on the up or downside. So there's going to be a lot of market action in the next 12 hours.
Absolutely. So let's kick it off right now with John Belton, portfolio manager and managing director for growth portfolios with the Gabelli Funds. Nvidia, one of the largest holdings in that growth fund, and some of the other big holdings, of course, also adjacent to that AI trade like Microsoft, Amazon, et cetera. How confident are you going into tonight's print?
Well, I like to take a longer-term view on Nvidia. I think it's tough to call any particular print. I am very confident that there's robust demand for Nvidia's products. I think tonight's numbers, both the January quarter numbers and the April quarter guidance, are going to reflect both supply and demand dynamics. So I think the supply side is a little harder to call, but very confident in the underlying demand and still think it's a great long-term holding.
I am curious as to what you want to hear out of the company, particularly when it comes to kind of that longer-term view of the sustainability of this AI spend and and whether it morphs into something else, particularly given the surprise we got from DeepSeek back in January, which seemed, at least for a brief moment in time, to kind of really evaluate the trade.
Yeah, there's a lot I'm looking to hear tonight. I think, like every Nvidia print, you want to hear about broadening out of types of customers. You want to hear about broadening out of the product set. So I want to hear good things about their networking products, their software attach rates, things like that. And when it comes to DeepSeek, I think Jensen Huang sort of previewed the way they're thinking about that already when he spoke in the press earlier this week. I think, I expect them to sound very confident and genuinely confident on that front. On the demand part, I think the last several Nvidia prints, one thing that's been very consistent is the way Jensen Huang talks about demand, some of the words he uses to talk about demand. I was going over the last print, my notes from the last earnings call as I was previewing or preparing for this earnings call, and he said things like demand is staggering. He said customers are clamoring for as many chips as they can get their hands on, and when they get those chips, they're racing to set up the systems. I mean, it doesn't really sound like a semiconductor company. It sounds like something in my personal life. Like my wife is a big Mumford & Sons fan, the band.
Yeah.
And a couple of weeks ago, they announced a surprise show in Brooklyn.
Okay.
And we're releasing a couple hundred limited edition tickets.
Yeah.
And staggering demand. That's how my wife felt for the Mumford & Sons concert.
Yeah.
Clamoring to get her hands on those tickets. So
Yeah.
anyways, that was a digression.
Isn't that also like a Beyonce concert? Like,
Yeah.
and they go out in seconds. But to that point,
I was just want to say I did not have a Mumford & Sons reference on my bingo card today.
I did not,
Yeah, so
particularly at the
thank
top
you,
of the hour. We dig that. But nevertheless, they are going through a product transition cycle, right, from Hopper to Blackwell. Will the strength and production ability in Blackwell be enough to make up for the lack of demand they're going to see in Hopper?
Definitely a focus for this print. I think what some of the nearer term focus has been around this product transition, and it's specifically on, again, back to the original comments, the supply side of the equation for NVIDIA. So we heard a lot of noise coming out of the supply chain associated with this ramp up in Blackwell production and Blackwell distribution. And Blackwell is a very complicated product. It comes in dozens of different configurations. It's, I think, proven very complicated for NVIDIA to get the supply chain in a place where it's able to deliver to the demand. So there could be some near-term noise. Will the beat in the January quarter be smaller than the types of beats we're accustomed to? Maybe, but I think if that's the case, I would expect a really positive outlook for the April quarter because by now it sounds like the Blackwell machine is very much.
So it's just pushed out. It's not delayed indefinitely if it happens that way. So
that's something that wouldn't bother me.
Yeah. For your growth fund, you are invested in Microsoft, Nvidia, Amazon, Apple, Alphabet, and then Meta in terms of your weightings. How much CapEx growth do we need to see from those hyperscalers to then have NVIDIA be as bullish for 2026 and 2027 that the market might expect?
Well, I think back to this demand point for NVIDIA, all of the commentary we got from these hyperscalers over the last earnings cycle, overwhelmingly positive. I think every one of those, the big four hyperscale companies, so Meta, Microsoft, Google, Amazon, presenting 2025 CapEx outlooks way above the street. Those four companies combine for something like half of NVIDIA's data center revenues. Those four companies alone, $325 billion of CapEx expected this year. That's up 50% year on year. And within that CapEx, a higher mix going towards chips and servers, so NVIDIA versus data center. So I think that level of CapEx should be kind of baked in. Feel really good about that.
One thing I am curious about too, because I mean, Nvidia, at least in terms of those high-powered chips, is more or less the only game or town. I mean, we can forget about DeepSeek and however they were able to achieve what they achieved. But we do know a lot of the big cloud providers, some of the names you mentioned, are also trying to develop their own in-house chips. Is that going to be complementary to what Nvidia is doing, or is that going to be legit competition?
I think the two services can coexist in what's going to be a huge market. So I think you're referring to some of the custom silicon programs going on at Google, which is being designed by Broadcom, and then Meta's got one in slightly earlier stages. Amazon's got their Trainium program. So I think those are those types of programs that's trying to design a much more niche, sort of workflow-specific type of chip, whereas what NVIDIA does is general purpose. It's something that's going to work right out of the box. You don't need a team of engineers to be able to get it to work. So I think the two things kind of serve different functions. They can definitely coexist. You're going to see companies like Meta, like Google, like Amazon use and offer both. I think most of what these cloud companies are doing with custom is for their own internal workloads, not selling externally.
How much have you been paying attention to what's going on in China? Obviously, you had DeepSeek in January, but now, of course, Alibaba seems to have found a new groove because of some of its a pivot and embrace of AI. Is that an opportunity for you, or are you staying away from that? Well,
I think DeepSeek and China, there's a lot of different reads there. I think for the health of the AI ecosystem broadly, NVIDIA aside and globally, I think it's definitely good. It's going to mean more models, bigger models, more usage, more workflows, more use cases, et cetera. So should be good long term. I do think it creates a new sort of geopolitical dynamic where U.S. policymakers are probably increasingly attuned to what China's doing with AI. I don't really have an edge on calling how that's going to unfold, but one thing NVIDIA is going to need to talk about tonight is we're hearing more reports of potential incremental export restrictions. They're going to have to address that. I do think actually near term, some of these dynamics could be a positive. We're hearing reports of post DeepSeek demand for Nvidia's China compliant chips has actually really accelerated as customers want to get as many chips as they can.
All right, John, a great conversation, a busy night for you, I'm sure. John Belton, portfolio manager and managing director for growth portfolios with the Gabelli Funds. As we count you down to those earnings out of Nvidia, of course, the picks and shovels portion of the equation. But what is the use case for consumers? Well, Amazon trying to provide a bit of an answer. A little bit earlier today, the company announced an overhaul of its voice-activated assistant, Alexa, giving it a reboot with AI. It's the biggest overhaul in that product since its introduction. Amazon's Senior Vice President of Devices and Services sat down with our very own Caroline Hyde. Take a listen.
She's smarter. She's conversational. She's personalized to you. It's so exciting when you have a conversation with Alexa. It feels incredibly natural, but I think most exciting is she'll actually help you get some stuff done.
I really want to understand the underlying technology here, because in many ways, Amazon has continued to be agnostic to large language models. You want to offer them all. You have, of course, this relationship with Anthropic. How much has this technology been infused to making her more conversational, making her more useful?
You know, you said it. We use different foundational models for sure, and Alexa picks the right model for the job. We use Amazon Nova, which is exciting, and just an incredible LLM, and then we use Anthropic's Cloud as well, which has been phenomenal for the product. And basically, depending on what the customer is doing, Alexa chooses the right path and delivers the results needed.
What's interesting, though, is perhaps timelines were pushed out. We first heard about a new AI-infused Alexa back in 2023. You said on stage that really you've been limited by the technology. What are the key limitations and how have you fixed it?
I mean, you have to re-architect it from the bottom up. The first thing you have to know is, like, when you have hundreds of millions of customers already using the product, you have to deliver back to them everything they already love about it. And so you have to start there, which is one of the challenges with LLMs. It starts to change that experience.
All right, turning back to Nvidia, we will have a full breakdown of how AI is impacting the tech giants' results as soon as they hit the tape with the big names in tech and tech investment space. All that and more coming up. This is The Close on Bloomberg. All right, shares of GM are higher this afternoon. The car maker announcing plans to repurchase $6 billion in shares and raise its dividend in a move to reward investors. And this comes as the auto industry faces uncertainty about the impact of President Trump's tariff threats and pledges to roll back support for EVs. Joining us now to discuss is Bloomberg's David Welch. Clearly, the market likes it. But why not leave it in dry powder, considering we have no idea where auto tariffs are going to wind up?
It's a great question. Look, the company believes that their cash generation is going to be good enough, no matter what happens with tariffs, to be able to buy back these shares, and they'll have plenty of cash. They did finish 2024 with more money than they thought. They had a higher automotive free cash flow last year, and they've guided for another strong year for cash flow. Funny thing is, though, when they announced that, they also said it depends on what happens with tariffs and other things that the administration might do. But they must have confidence that if there are tariffs, they're not going to last very long, and the company will be able to forge ahead selling vehicles they bring in from Mexico and getting parts from Mexico for the vehicles they make here, and the profits won't be hit that hard by it. They do have other plans in place, which they won't detail, on how they might mitigate the damage that could be done from 25% tariffs. But it's still, you can't overcome that kind of tariff, especially on parts coming in from Mexico.
Well, that's what I'm curious about.
We'll see.
Well, that's what I'm curious about, David. I mean, if this was just something, kind of a routine measure to kind of placate investors for the time being without necessarily addressing the potential impact on their actual sales themselves, do we have any insight into that?
Well, if you were to put tariffs that high, 25% on some of the parts, the estimates are you would see the average price of a vehicle in the U.S. go up by $3,000. Companies will try to pass that on to consumers, but that's very difficult to do when the average vehicle is selling for about $48,000. Interest rates are high, so monthly payments are very high, and that's how most customers shop. So something's got to give here, and I think what would happen is we would just see a decline in industry volumes in the U.S. Customers will just hold on to their cars longer and get them fixed, rather than pay either a tariff premium or continued high prices on the vehicles. And so I'm not sure companies will be able to pass those added costs on to them, and that's a profit hit. So car companies are either going to take a profit hit or a volume hit, bit of both, and it makes the business a lot tougher. So the only reason you spend this kind of money is if you think you'll still be generating a lot of cash going forward regardless of the tariffs, or you just don't think the tariffs are going to be put in place. President Trump does a lot of things, or says a lot of things, and doesn't actually end up doing all of them. So that when I say we'll see, we'll see which ones he actually puts in place. Absolutely,
David. I was curious as to if it also meant that they had confidence they could pass on the cost increases to customers. Like if they had a feeling that certain styles or certain automobiles had enough demand that they could do that. Would that be true at all?
It's difficult. I mean, GM is, from a profit perspective, probably has the most at risk here because they have two large pickup truck plants, one in Mexico and one in Canada. That's their most profitable product line. Now, they do, of course, have a lot of production in the U.S. for that, but it's their highest selling vehicle, the GMC Sierra and Chevy Silverado pickup trucks. Very high margin. Stellantis has a plant in Mexico too, so they're exposed. Ford makes all their trucks in the U.S., so they have the least exposure in terms of those high profit vehicles. Some of the other companies like Nissan and Volkswagen, much more of their U.S. volume comes from plants in Mexico, but pure profit perspective, GM has a lot to risk here. So they've got to be pretty sure that the USMCA countries will, in the end, even if there are tariffs, they're not going to last long, and they'll still be able to get their parts and those very profitable, very important vehicles across the border with minimal tariffs.
All right, well, we'll see if this, what this does, of course, for the company and more importantly for the shares, up for a third straight day here. Of course, this is still a stock down about 20% from that year-to-date high back in November. David Welch there in our Detroit bureau with a closer look at the auto industry. When we come back here in New York, we're going to pivot and take a closer look at the retail industry. Same-store sales on the rise for TJX. That's coming up next on our top calls. This is The Close on Bloomberg. All right, time now for our top calls. Big movers on the back of analyst recommendations. And we're going to start today with American Airlines, an upgrade to buy over at Redburn Atlantic for what the analyst calls a, quote, Goldilocks period for U.S. airlines. He says American stands to see the greatest upside in the group and expects earnings and cash flow to remain solid for much of the year. Those shares moving higher by about 0.7% on the day. Next, we got to take a look at Alibaba. The ADR is there getting an upgrade today to outperform over at Bernstein, which says it's optimistic about the company's potential to capitalize on artificial intelligence. The analyst says possible spillover effects of an AI capex boom in China could send Baba's earnings on a more upwardly pointing trajectory. It's already been there. 2-day run now, recouping most of the losses from Monday's 10% drop. And finally, Lululemon cut to hold over at Earth's Group. U.S. consumer confidence fell this month, by the most since August 2021, leaving the analysts over there to see a potential burden on Lululemon sales and earnings growth. Those shares down about 0.8% on the day, down for 2 straight days, and those are some of our top calls. Of course, Lululemon decidedly a little bit more discretionary than TJX, because that stock right now doesn't seem quite as burdened by some of those issues. The company out with earnings, beating out street expectations for net and same-store sales in the fourth quarter, leading the CEO to tout plans to expand its global presence. We're also going to get earnings a little bit later out of Urban Outfitters, which will be another assessment of consumer spending. Zach Warring covers them both as an equity analyst over at CFRA, who is pretty bearish on TJX and has a hold rating on Urban Outfitters. All right, let's start with TJX here. I mean, every quarter we kind of come in thinking, okay, maybe we're going to start to see some cracks here that will cause investors sort of reevaluate this trade. We didn't get that this quarter. And I am wondering, Zach, when you take a look at this company and the same-store sales growth, do you see any impediment to that growth continuing?
Yeah, well, thanks for having me. So, we do think TJ Maxx is a great company. We do not think by any means they have a good balance sheet, and, we don't think they're falling apart. We just think valuation's a little stretched here. Company trades at 29 times forward earnings and typically trades in the low to mid 20s. And so I think, and then analyst expectations were pretty high coming into this earnings release. They expected guidance to come in about $4.60 for this year in terms of EPS, and the company guided well below that. So it's a little shocking for the reaction, so far today. But yeah, we just think expectations are high and valuations high, and there's very little room for error.
When we talk about the state of the economy and the state of consumer spending, if things are weakening, as some economists are predicting, does that benefit a company like TJX, or will it hurt them?
I think the perfect operating environment is, kind of the current environment. I do think if you saw weakening from here, it would cause TJX growth problems. They obviously benefit as consumers trade down and are kind of looking to, be a little bit more thrifty. And so this is kind of that perfect atmosphere for them right now. And so I do think if you started to see some cracks in the consumer with valuation this high for the company, it would be an issue.
They talked a lot on the call about tariffs, and they seem pretty confident that tariffs could also be a margin opportunity because they could price a little bit differently. Do you buy that?
I do think they are shielded a little bit from kind of their business model from those tariffs, just because, they typically buy from, other retailers who have that inventory maybe already in the U.S. So I think they're a little bit more shielded than, some of your other retailers. So I do see that.
And then staying on retail for a second, we do get Urban Outfitters after the closing bell. What should we be looking at there?
Yeah, so you've seen, there are two growing brands, Anthropologie and Free People. Those continue to impress. And then their namesake brand, Urban, has actually been kind of the laggard and has been, seeing a sales decline over the last few quarters. So if you started to see maybe a return to growth from their Urban brand, I think that company would be deserving of a little bit higher multiple, and you would see investors probably give that to them. I think right now they're a pretty good company. They've proven they can grow over the last 2 years without Urban. But I think if you saw Urban growth, start to return, I think that would, earn a higher multiple for the company. Currently they trade at 11 or 12 times forward earnings. So I think you could get into the mid-teens there.
All right, Zachary, we really appreciate it. Thank you very much, Zachary Warring over at CFRA. Thanks a lot. So it's not just Urban Outfitters after the bell and Nvidia. There is a slew all over the map in a ton of different sectors. Yeah,
well, at least in terms of, more the consumer-facing sector, you get Red Robin Gourmet. I know it's a relatively small company, but maybe another read on discretionary spending, whether people are willing to go out. And then you get eBay as well, which is thrown in there. Also, I think to a certain extent, a bit discretionary. And of course, that's on top of all of the tech earnings that we're getting.
And Sweetgreen.
Oh, Sweetgreen, too.
Everyone loves the Sweetgreen. So you want to see that?
Now, is that discretionary? Because those are some expensive salads.
They're $20 now.
Yeah.
That's why I go to my place around the corner. They have $10 salads.
I saw where you went to lunch today. I was like, oof.
You did.
I thought you were fancier than that.
He made a face. No, I'm most definitely not. All right, coming up, you got gold prices taking a slight dip today after a record-breaking run. We're going to chat more with John McCluskey. He's president and CEO of Canadian gold producer Alamos Gold. This is The Close on Bloomberg.
All right, no lovin' for AppLovin. I stole that. The shares at one point down more than 20% on the day after two reports, short seller reports, were released, raising a lot of questions here about the company's business practices. The main allegation is that AppLovin misrepresents the benefits of its AI advertising platform. Now, the CEO of AppLovin has just issued a response calling those reports littered with inaccuracies and says all of the games the companies promote are also apps published in the App Store. Jess Menton joins us right now, helps lead our stocks coverage here at Bloomberg. AppLovin, for those who don't know, basically if you're playing a video game, particularly on your mobile device, and you get an ad on that device, AppLovin most likely was behind that. So what's going on here?
Right, so you had two short reports this morning. So if you're looking at a couple of those, and this came actually after Bear Cave, that's a separate, that put a short announcement on in recent sessions too. So basically the three of them were arguing when you're looking at the app that it is potentially providing, especially if you're on some of these mobile games and how it's supposed to get you to download more games. Some of them, especially with Fuzzy Panda and these other ones today, like Culper Research, were arguing that some of the practices is potentially either very similar to what Meta has put out, or even for Fuzzy Panda was arguing that it was stealing what Meta was doing. But of course, you do have sell-side strategies.
Fuzzy Panda is not a euphemism. euphemism. That's actually the name of the company that issued the short
Right, some of these names that are out here that have funny names here, just to be apparent. But of course, Apple have declined to comment. So we have Carmen Reinecke on our equities team, Matt Turner, that have been all over this today. But to your point, we just recently heard from the CEO that made the comments here. But you do have sell-side research like Wedbush actually pushing back because they were arguing we would have seen some of this potentially in their revenue numbers. They just reported earlier this month that also that company got added to the NASDAQ 100 in November. It replaced Dollar Tree. And people were maybe some were sleeping on the amount of the rise that it had been last year, but over 700% gain in 2024 and still up over 500% over the past 12 months through yesterday's close if you don't count today's decline.
So that, first of all, those numbers are tremendous. So is the accusation that they're using a model from Meta to get kids to click on more ads?
So that's what Fuzzy Panda and Culper Research were arguing. If you look at what the Bear Cave was putting out, so there's a Substack research that they do analysis like they were pointing out for companies like Planet Fitness in recent years, different things regarding when they were looking at the company's fundamentals that weren't adding up. Sometimes they've gotten certain calls right, other times they hadn't. Like with Celsius, they got that one wrong. But with this one particularly, they were arguing that when you're looking at those types of ads and what they're downloading, it's not necessarily adding up. And then also that they don't really feel like it's working quite as well. And so you have 3 of those short reports that have come out against this company, and that's why you've seen, after a stellar rise over the last year, you're starting to see that stock down. And at one point today, its market cap was down more than 30%.
And I should point out that the CEO issued a statement on these short reports just kind of moments ago in a blog post on a website saying that the short report is littered with inaccuracies, doesn't track children's data, as Wedbush was also saying, and that they make money on value, not on clicks.
Yeah. So this is such a big move, and especially if you're just looking at its PE ratio over the last year. Earlier this month, it was trading around 74 times forward earnings in relation to the Mag 7. The Mag 7 is trading about 30 times in addition to that. And even though you've seen it come down, it's still trading about 46 times forward earnings over the next 12 months.
Amazing. Did you hear the Mag 7's Lag 7? Was that in your piece this
morning?
It was.
I read a story this morning.
I was like, oh, I'm going to steal that. Mag 7, Lag 7. Is that actually like catching on right now?
You know, I feel like people have been saying more and more for that, especially in the last couple of months since we've seen those stocks come off some of those highs. But, you still have Meta, even though the Mag 7's been technically in a correction yesterday, you still have Meta up and actually on pace to snap 6 straight sessions of losses.
That's a good point. All right, Jess, thanks a lot. We really appreciate it. Jess Menton joining us. Now let's get to Nvidia. The stock is up 3.5% as we await earnings. Bloomberg's Ian King joins us with more. Ian, this is the first earnings report since 2022 where Nvidia has been down since its last earnings report. Where does that leave us in terms of expectations?
I mean, the way to look at it is compared to where we were 3 months ago, there's a lot more sort of clouds on the horizon. There's a lot more concern about the fundamentals that have been driving this company and indeed the whole industry over the last couple of years. So I would say there's a lot more apprehension going into this, and that's obviously reflected in what we've seen the share price do this year.
Typically, Ian, how does Nvidia handle their outlook? Is it like an under-promise, over-deliver? They usually bang on estimates?
Yeah, I mean, this is a key thing. Estimates are nice to have for Nvidia, but investors have got so used to them just blowing past them that they're a nice guide, but they're not really an exact science. So, about 42 billion in revenue for the forecast quarter is what the street is predicting, but some estimates are, in the 47 range. So obviously there's not a lot of precision there.
Ian, talk to us a little bit about the actual chips themselves. Obviously, there's going to be a big focus on these new Blackwell chips, and kind of put that against the backdrop of the previous iteration of this. I mean, what's the anticipation with regards to the adoption of these new chips? Is it just going to be new customers, or is it going to be old customers upgrading to the new chips?
Yeah, that's a very good question, and I think that's the key question going into this is how quickly are we transferring from Hopper to Blackwell? How quickly can Blackwell reach the kind of shipment volumes that Hopper was at, because there's a complicated supply chain? But really the customer base, and that's the other big question over Nvidia, is how quickly can they expand their customer base beyond Microsoft, Facebook, Amazon, the 4 or 5 companies that they really depend on. People want them to have more customers than they have right now, and that'll be something that's a focus as well, remain.
I'm also curious, and something that I think we're going to talk a lot about. We're doing a special coverage of those Nvidia earnings, which are coming after the bell tonight, a full hour of just blanket coverage of everything and everything AI. And I am curious about potential competitors? We know there are some of the cloud computing companies are trying to work on their own in-house chips. I don't know how far away they are from that actually being reality, but when it does become reality, if it becomes reality, is that meaningful competition for Nvidia?
No, this is, again, another perennial concern for investors in Nvidia is that all of its biggest customers are making their own chips, and they're not making their own chips for fun, right? They're making their own chips because they don't like Nvidia's 75% margins. As simple as that. So how quickly can they get there? Can they ever get there? Really big questions. Nvidia so far is just far away, the best chip maker for this particular type of workload. Intel and AMD are kind of struggling in its wake at this point.
Ian, this might be a very silly question, but when you guys were talking about expanding their customer base versus just expanding their market share within the current customer base, who could some of their new customers wind up being?
That's exactly it. Everybody. Right? The answer is, yeah. How quickly can AI get out into the economy as a whole? How quickly can AI computers, for want of a better expression, start showing up in corporate data centers and not just be confined to these giant cloud data centers that are providing services over the internet? When can we see that transition? When can we see robotics? When can we see self-driving vehicles? When can we see AI designing ships and all of these kind of things that we've been promised? And the answer is probably it's going to take a while, right? But people want signposts along the way. They want some sense of progress.
Mm-hmm. So, Ian, just when we were listening to this conference call later tonight, when we kind of finally get to hear from Jensen Huang, because I know the numbers backward looking aren't going to matter as much as the type of guidance that he's willing to provide the street here. What is the most important thing that you want to hear out of him?
Yeah, I mean, he will be asked, and if he isn't asked, there's something wrong with Wall Street. How sure are you? How is demand trending? Can you meet these orders? So what they'll be looking for is him to say, look, hey, don't worry. I know you're all concerned right now. I know we've seen one or two blips here and there. Don't worry, demand is still exceeding supply. And this has been a consistent message for him. Mm-hmm. And then to riff on how well they are able to meet that demand and fill those orders, which is the derivative question. I assume, that he's going to answer that and try and make people feel happy again.
Yeah. All right. Well, Ian King, of course, our man out west on everything chips. And of course, we will be talking everything chips after the bell when Nvidia reports, not just because of the chip side of it, but of course, probably one of the more consequential companies for this market, second highest weighting in the S&P. And remember, last year, the biggest contributor on an individual basis to the S&P's gains. Lale Akoner are going to be joining us after the break. This is Bloomberg.
I am very confident that there's robust demand for NVIDIA's products. I think tonight's numbers, both the January quarter numbers and the April quarter guidance, are going to reflect both supply and demand dynamics. So I think the supply side is a little harder to call, but very confident in the underlying demand and still think it's a great long-term holding.
John Belton, a portfolio manager at Gabelli Funds that holds shares of Nvidia, talking about the big earnings report coming up after the bell tonight. Romain Bostic here alongside Alex Hill. Nvidia, one of the big gainers on the day, but on a year-to-date basis, it's basically contributed nothing to the broader market.
And it's still down from its last earnings report. Again, we haven't seen that since 2022. Stock's down flat, but the fade during the day, that never feels like necessarily a good thing. Consumer staples leading the S&P lower as well. You're also having the Mag 7 still struggling to get into positive territory. And as you pointed out, Nvidia is still up almost 4%. Tech outperforming also in the S&P, but again, just up 0.9%.
All right, as we count you down to those closing bells and count you down to a very busy earnings afternoon, we should point out, in addition to Nvidia, we're going to get quite a few other consequential companies, including Salesforce, of course, which has made a huge push into the AI space and raising a lot of questions here about what's next for the AI trade, the tech trade overall. Lale Akoner joins us right now. She's a global market analyst with eToro. Lale, great to see you once again. It's been way too long.
Thank you. I know.
We have to talk about this tech trade here because, I mean, we know last year was really all about this AI trade. That fueled the hopes and dreams of so many investors. And that's kind of been arrested for the last, couple of months. And I think this report tonight could potentially change that, either for the good or the bad. Are we making too much of it?
No, I think it is crucial. As we know, the sentiment has come under pressure due to DeepSeek changing the entire efficiency of the models of these large tech companies. So we are eyeing it very carefully as well. And as we know, a lot of investors are moving away from the US in the tech space, looking at European companies, Chinese companies as well. So I think today is crucial to understand whether the US is again driving the AI theme.
Yeah, and particularly given, I mean, we talk about obviously what DeepSeek put out back in January. And then, of course, the resurgence that we've seen in some of the Chinese tech stocks just over the last few weeks, particularly with Alibaba, now that they've articulated an AI strategy. Is this competition or is this all going to be complementary in some way?
I think competition is complementary, in my opinion. I think that obviously these low-cost products are pushing these U.S. tech companies to be able to compete better. So I think this is all very positive, but obviously in the short term, the investors are really trying to understand what are the more valuable, low-cost investment opportunities out there. And obviously a lot of investors are quite nervous about what tariff policy of the new U.S. administration will mean for these large tech companies in the U.S., which obviously are importing from Chinese Chinese and Korean chip makers as well. So it is very uncertain, but overall I do view it as good for competition and products that will be launched in the future.
And not to mention then that Nvidia sells chips to China and any chip restrictions there, so there is that element as well. Are you trading or investing around tariffs in different sectors right now?
Yes, we are. We are saying that, look, services sectors are better insulated from tariffs as opposed to the goods sectors. Overall, we're looking across the globe. I mean, in the U.S., financials, healthcare, as we've seen in the earnings numbers and their revenue streams, quite strong in our opinion. Mid-cap stocks and small-cap stocks for us is very interesting, again, due to low cost, but very high quality, stable cash generating profiles as well. In Europe, again, I would say financials, healthcare, tech companies, and to some extent industrials as well, given the fact that one of the most important European country, Germany, is done with their elections and the policy uncertainty has diminished to some extent, is making us very positive. And obviously, as we've just talked, Chinese tech companies are quite interesting.
Lale, what do you do with sectors that are, though, front and center like autos, right? Then we have GM in increasing its dividend and buyback. That would be a good thing for an investor, but they are definitely in the front lines when it comes to tariffs.
We want to stay away from automakers for now until we are very clear on the tariff policy coming from the U.S. administration. Again, Ford, General Motors, Volkswagen, Stellantis, Daimler, all are exposed to tariffs in our opinion. So we will wait until policy is clear.
So I am curious just where else you're finding opportunity, because we talk about the market moves, at least here in the U.S., and we have actually seen a broadening out of what investors are looking at. Unfortunately, that's not enough to lift the aggregate market, but there's still been a lot of buying under the hood. And if it's not tech, if it's not some of those big cap names, what exactly is the opportunity right now beyond that?
I think financials, again, are great in the first year of an administration. Healthcare stocks do outperform the S&P 500 whenever there's a Republican administration. Again, we're looking at pro-border adjustable tax companies that do support those tariffs are, again, financials such as Bank of America, JP Morgan, MasterCard, and Prudential. Obviously, staying away from companies which are anti-border adjustable tax, which is, Walmart, Nike, Gap, and Toyota. So the sectors are very, you need to be very careful in understanding which companies are pro, which companies are anti, which companies are more going to come under pressure due to tariff situation.
I do want to get your take on something that's going on outside of public equities, and that's the drop that we've seen over the last few days in crypto, particularly in Bitcoin, now back around below that 85,000 level. And I am curious as to what you think is driving that and whether you see any opportunity for dip buying there.
Sure. Obviously, rising inflationary pressures is interesting in our opinion, and it is driving some of the trade that we're seeing and volatility we are seeing at the moment. But we are saying that, look, easy policy is still in place. The Fed had to stop for now Yes, the pace of rate cuts is diminished. But again, I believe that they will continue towards the end of the year in their cutting cycle. Obviously, the Bank of England here in the UK and the ECB are accompanying the Fed in that easy policy, which is good for crypto as well. Deregulation obviously is very positive as well. So we do think that there is a floor on the crypto, especially on Bitcoin at the moment due to the new administration.
All right, Lale, I got to leave it there. Great to talk to you here as we get set up for the closing bells in New York, which are about 2.5 minutes away. And more importantly, Alex Steele, we're setting up for a slew of earnings, including the second biggest company in the S&P, Nvidia.
Excited? You excited?
I am excited because, where were you back on January 26th when DeepSeek sent that shot around the world?
I was here. Was I?
Okay. Well, it was a Sunday.
Was
so
I
hope
here?
you weren't
Oh,
here.
no, I wasn't here. I don't remember yesterday. He's asked me about the end of January. But this is going to be key in that moment. Looking for what? 8, 9, 10% move? Going to be huge.
All right, stick around. Full market coverage of those earnings coming up now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele taking you through those closing bells. A global simulcast starts right now. Scarlett Fu in the TV studio, Carol Massar, Tim Stenovic in the radio booth as we welcome our audiences across all of our Bloomberg platforms. Special coverage of earnings of Nvidia expected to cross over the next few minutes.
All in on Nvidia, right? 4:20 p.m. Wall Street time. That's what we're expecting. And we've just been watching the trade in Nvidia. Despite some bouncing around on the equity trade, you got Nvidia, guys, up about 3.6% off its highs. But nonetheless, I'm not quite sure what this trade means.
Look, Nvidia is the one that matters, but we can't forget we got Snowflake, we got C3 AI, we got Salesforce coming after the bell as well. We are in the thick of it right now.
Yeah, we have Sweetgreen, Urban Outfitters, companies that have nothing to do with AI, but this idea that Nvidia itself can single-handedly revive the AI trade, stakes kind of high, aren't they?
Well, if you take a look and you're looking at what 10% move for Nvidia would be a $300 billion market cap swing. That would be the biggest market cap swing that Nvidia has ever put out.
Yeah, and just to go through the numbers real quick, too. We're talking about revenue growth that's still at around 73%, at least based on the average of analyst estimates. I think what's key here is the idea that the previous 6 quarters, it was over 100%, in some cases 200 and 300%. So you're seeing a downshift. And I guess what I want to know, and I think what a lot of people want to know, is what's that forecast going to look like? It's certainly not going to be triple-digit percentages, but if it's still 50, 60, 70%, can the market live with that?
And investors haven't been that enthusiastic, right? The stock is down for the year. This is the first time the company is reporting earnings when the stock has been down. So we'll see what we get in just a few minutes' time.
Obviously, and making up, of course, more than 6% of the S&P weighting. So as Nvidia goes, so too does the broad market. Nvidia was not enough to really lift the broad market today with the S&P 500 basically unchanged on the day. A bit more of a meaningful bid into the NASDAQ Composite and NASDAQ 100, higher by about 2 to 0.3%. The Dow Jones Industrial Average in the red for the day, and the Russell 2000 squeaking out a modest gain, up 4 points or 0.2%.
All right, to the S&P 500 I go, and you've got 302 names to the downside on this Wednesday. And Scarlett, you've got 198 gaining some ground here.
All right, let's take a look at the IMAP and the sector performances. And fittingly, on the day that Nvidia is reporting results, tech is the leader here, gaining 0.9%. And then after that, you have utilities gaining 0.4%. Communication services also in the green. The worst performer here, consumer staples, the stalwart defensive group, healthcare, and real estate investment trusts also in the red.
All right, guys, let's get to some of the individual gainers. And of course, I've got Nvidia on that list. As I mentioned, it's up about 3.7% here at the closing bell. Of course, reporting in less than 20 minutes time. So we're going to see whether or not that AI trade is justified or is rejustified, if you will, by what we get from Nvidia. So we'll be keeping a watch on that one. Super Micro, folks, this was definitely top in the S&P 500 today, up about 12% in today's session. Companies submitted after the closing bell, their financial reports that kept them listed. Go ahead to Salesforce.
Speaking of AI, Salesforce earnings are out. The company saying that in the fourth quarter, sales came in a little bit light, $2.13 billion. The street was looking for roughly $2.17 billion. Services revenue relatively in line at $2.33 billion. Operating income also in line at about $3.3 billion here. The company's forecast, this is for their fiscal year, the full fiscal year 2026, they see revenue in the range of $40.5 billion to $40.9 billion. billion. The street was looking for $41.5 billion. I can keep going through these numbers, but they're all saying the same things. The company is basically saying that their numbers are either going to be in line or slightly below the average of street estimates, and you're seeing the shares down 8% in the after-hours trade.
All right, let's also go to Paramount, the media company, reporting fourth quarter revenue $7.98 billion, below analyst estimates. The TV revenue of $4.98 billion was also below analyst estimates. And the streaming service that Paramount has launched, Paramount Plus, the subscribers came in higher than anticipated, 77.5 million. Analysts were looking for 74.42 million. The direct-to-consumer revenue was about $2.01 billion, also missing analyst estimates. Stock barely lower right now, just off 2% in after-hours trade.
Just going back to Salesforce, some of the color as well. So remember, Agentforce is their big AI push. They said that it handled about 380,000 conversations with an 84% resolution rate. Nonetheless, you're looking at that stock down over 10% on that weaker than expected outlook. But guys, what's interesting is that $900 million in cloud data and AI annual recurring revenue, that's still up about 120% year on year.
Yeah, it's still digging into this press release. Mark Benioff over at Salesforce, chair and CEO, saying that there's no company better positioned than Salesforce to lead customers through the digital labor revolution. He points out the deeply unified platform. He integrates our Customer 360 apps, Data Cloud, and Agentforce. Remember, this is about agents now. He said we're already delivering unprecedented levels of productivity, efficiency, and cost savings for thousands of companies. Shares, though, down by 7.6%. That guidance coming in light.
All right, back to Paramount Global. Looks like the stock is actually unchanged here in the aftermarket. We did see fourth quarter revenue missing estimates. TV revenue also down about 3.7% year over year. Direct-to-consumer revenue up 7.7% year over year. And film entertainment revenue, a gain of about 67% year over year. So again, not seeing too much movement, at least as of yet, in that trade.
Yeah, absolutely here. And we know, of course, a lot of the broadcast and media companies are going through a few things out there right now. Sinclair Broadcasting, if you care, those results crossing the wire as well. There's a slight miss there on their 1Q revenue numbers at 765 to 779 million. That's the forecast it gave. That's below the average of street estimates. But guys, I do want to just go back to that broader AI trade as we look at Salesforce, which of course has made a big push into kind of pushing out those agentic AI tools. And I get the fact that they've got all these new customers. There's some great numbers that you laid out, Tim and Alex. But when does that show up in the bottom line?
When does that show up in the bottom line? A lot of it will depend on how Mark Benioff frames the outlook going forward. Whether DeepSeek changes things, and we know that certain companies will be better positioned as a result of AI models being cheaper and more efficient, like a Salesforce, for instance, or a Meta, while others will have to kind of rethink their commitment to all that spending.
Yeah, I just want to, I know Salesforce is the mover and AI conversation and all that, but I just want to go back to Paramount for a second. I appreciate the stock's not down that much, but the read-through to CBS and MTV and that linear TV was just really not great. I mean, if I can say that. You're taking a look at Pluto, MTV and CBS, guys, sales fell 4% to under $5 billion. I mean, this is a grim world for linear TV.
It really is. When do we start seeing some, real M&A happening in this space? We've seen that Netflix is the one that can pull this off, but pretty much everyone else is a distant second to
Well, they're waiting
Netflix.
for it, right? Paramount's waiting for M&A to pan out right now.
So when do we actually see that happen?
Well, the government has to not get in the way.
Exactly.
Yeah, let me get
to it. Yep.
Yeah, Urban Outfitters out. Fourth quarter adjusted EPS, the retailer is starting to report. Fourth quarter adjusted EPS of $1.04 a share. That's 10 cents better than the street was expecting. Fourth quarter EPS, well, that was adjusted EPS, which is what we kind of care about there. And you see the stock right now up about 5%. So a big beat, just a few headlines so far crossing. We'll look for some more on Urban. What do you got, Romain?
All right, let's take a look at Snowflake here. Of course, the software company out with its report here. And it's kind of interesting to see the difference between what it's doing and what Salesforce is doing. Two different companies, but kind of moving in the same direction here. The company saying that in the fourth quarter, its revenue did come in above street estimates, $986 million. We're going to round it up to $987. The street was looking for $958 with that product revenue impressing to be sure. Diluted EPS, a beat at 30 cents a share. The street was looking for 18 cents a share. And here's your guidance. In 2026, the company saying that product revenue for the full year will be in that $4.28 billion, which is just slightly above the average of street estimates at around 4.23, a modest bid in the after-hours trade.
All right, let's move on to TKO, which of course owns the WWE. Fourth quarter earnings per share matches analyst estimates at 28 cents. Revenue coming in higher than anticipated at $642 million. Analysts were looking for just over $607 million. WWE revenue, $298.3 million, higher than anticipated, along with UFC revenue also beating analyst estimates. EBITDA for the fourth quarter on an adjusted basis, $238 million, higher than anticipated, but the stock currently lower by 3.5%.
All right, looking at C3AI, their third quarter subscription revenue actually just meets estimates there. Their subscription revenue is up about 22% year on year. Professional services up 64% year on year, coming in about 131 million. They had an adjusted loss per share of 12 cents, but that was a little bit better than the estimate lost, about 24 cents, and their revenue coming in just shy of $100 million, guys.
All right, eBay shares down 6% in the after hours. The company sees first quarter net revenue coming ever so shy of expectations, $2.52 billion to $2.56 billion. Estimates refer $2.6 billion. The company did, though, boost its dividend to 29 cents a share from 27 cents a share. The company raising that quarterly dividend 7.4%. Fourth quarter gross merchandise volume coming in above expectations. Shares, though, in the after hours down 6%.
All right, guys, Beyond Meat, a bunch of headlines here. I'm going to go to it's suspending operational activities in China. It sees one-time cash charges of about $1 million to $1.5 million. Job cuts representing 6% of the global workforce. So cutting the workforce in North America and EU. So approving that plan. Fourth quarter U.S. net revenue, $44.3 million. The estimate was $42.6 million. Stock's been moving around just a little bit in the aftermarket, just up about 0.3% here. So not much moves. But again, a fourth quarter adjusted loss of 65 cents a share. The estimate was for a loss of 46 cents a share. So a bunch of headlines. The stock now down about 1.3%, guys.
All right, let's go back to the chip space as we await those earnings out of Nvidia. Synopsys, which of course makes basically ways to design AI types of chips. They're out with earnings and the shares higher in the after hours trade. The company said that its fiscal first quarter revenue was actually down by about 12% to about $1.46 billion, and its adjusted EPS missed at about 3.03. But the company did give guidance that did appear to skew a little bit higher than what the street was looking for. 2Q revenue, a range of 1.59 to 1.62 billion. The high end of that range would be above the average of street estimates. It did something similar with its adjusted EPS forecast, and for its full year is basically saying look for about $6.75 to $6.8 billion in revenue. Once again, the high end of that range above the average of street estimates. Meanwhile, you have Ambarella, a more traditional chip company that makes a lot of things for visual designs. They're out with their earnings. The fourth quarter numbers came in at a beat, 84 million. The street was looking for 78 million. They're still posting, they're not a loss per share. They posted EPS of 11 cents a share. That flips from the loss that they had in the year-ago quarter, and the company providing guidance for operating expenses and margins that looks like it's going to come in better than what the street was looking for. Those shares up about 15%, Scarlett.
All right, I'm looking at Sweetgreen in the food space, and the fourth quarter sales rose 4%, missing analyst estimates, same-store sales, I should say, and the loss in that quarter was also wider than anticipated. You're seeing the stock tumble 19% in after hours trading. In addition, the revenue forecast for this quarter is lighter than anticipated, and it expects a first quarter adjusted EBITDA loss when analysts were looking for a profit on that basis of about $2.73 million.
And just rounding it out here, going to Red Robin, their loss per share for the fourth quarter came in about 94 cents. That was a little bit bigger than estimated, but their comp sales came in up 1.8%. I do want to point out that within the press release, the CEO saying that this year is still off to a good start. Comp restaurant revenue momentum they had from the fourth quarter is carrying over for the first 8 weeks of the first quarter, guys.
All right, guys, that's a wrap. A lot of earnings, and we're just about 10 minutes away from Nvidia earnings. Nvidia shares here right now in the aftermarket, just up about 0.4%, but all of us are going to be breaking that one down. That is a wrap. Across platform, radio, TV, YouTube, Bloomberg Originals. Alex heading out. I know Scarlett's going to stick around with Romaine and break those earnings. We are too here on radio. Guys, we'll see you again, same time, same place tomorrow.
And our earnings coverage continues right here on Bloomberg Television. Some of your biggest movers to the downside, that would be eBay, Pure Storage, Salesforce, providing some guidance here. They're coming in a little bit lighter than what the street was looking for. Those shares down about 5% here in the after hours trade. But Scarlett, to the upside, though, you are seeing some other folks in the software space get a bid. In fact, the biggest mover in the after hours trade, at least among larger cap companies, is Snowflake, and that's up 14%.
But the big one that everyone's waiting for right now is, of course, Nvidia, and the idea that the AI trade really hinges on what NVIDIA says about the outlook, what it says about whether its fundamental perception of the opportunities have changed because of DeepSeek.
Absolutely. And of course, the stakes are high. The street looking for 73% growth in NVIDIA's revenue. That would take it to about $38 billion. And they expect that on a quarterly basis to get up to $42 billion for the current first quarter that we're in right now. Danielle Shay joins us, Danielle Shay joins us, Vice President of Options at Simpler Trading. And Danielle, we've been talking a lot here about the AI trade and whether it was over or just interrupted, whether there was a reset to it. I know we haven't gotten the big numbers out of NVIDIA yet, but do you think there's life left in that big cap AI trade?
Absolutely, I do. I think that right now the NASDAQ is just consolidating. Last year we had a very strong year with Nvidia, but I love the price pattern right now. I think it's in consolidation, and I think that this trade still has a lot of room left to run. We have governments investing in AI. We have companies putting a ton of money here, and I think this is still a hot trade. Yeah, and obviously investors think it could be either up or down. Options right now implying about a 10% move in the cash session tomorrow based on what we get out of NVIDIA in just a few minutes' time. What do you want to actually hear from them? Like, what would be bullish for you to hear? Well, I think everybody's concerned about DeepSeek, but for me personally, I think that was a fantastic buying opportunity. Nvidia currently has a bullish pattern on the weekly chart, and what I'd like to see for the reaction to keep Nvidia up above 113. I think that we want to see from Nvidia that they're not concerned about DeepSeek and that cost coming down is actually a good thing rather than a bad thing. I also think that we want to see continued growth, obviously, but I don't think that investors should be surprised if it's not at the same rate as what we saw last year. I think at this point, the earnings moves over the last 3 quarters have been quite a bit smaller. We've seen a 3.5% move, 2.5% move, 7.5% move. And today we have a price in move of 10%. So don't be surprised if it's not as exciting as it was last year or as big of a move. But I think that overall, I'm focused on the long-term game plan here, which is a target in Nvidia up at about 165, 180.
Yeah, that deceleration is real, right? Because we're looking at an estimated 73% increase in fourth quarter revenue after 94% increase in the third quarter, and before that, 122% increase in the second quarter revenue. You have pointed out that in 6 of the last 8 quarters, Nvidia gapped higher after its earnings. I'm curious, when you look at options, how much are people positioning for that outcome, even with the shift in sentiment on AI overall?
So it's pretty typical that people position very bullish for Nvidia surrounding earnings. That's generally what we see every quarter, especially because, a lot of retail traders primarily position themselves to the upside, and this is a stock that has a lot of hype. And so oftentimes what you'll see is a move that comes in that's a little bit lower than expected. And so for options traders especially, that can provide an opportunity to sell premium in the options market. So that's something that that's a strategy that I will utilize. And sometimes there is a surprise. Like I said, we have 2 quarters out of the last 8 where Nvidia fell, but you'll notice that after those quarters, as long as that stayed within the expected move, which both of those did, they were great buying opportunities. So me personally, as long as Nvidia is only down 10%, which I know seems like a lot, but that's the expected move. If it was down 10%, I would still consider that a buying opportunity because it would stay within the context of the trend.
Danielle, how are you thinking about how NVIDIA frames its outlook? There's a calculus certainly for under-promising, giving a conservative guidance and over-delivering later versus providing some reassurance to perhaps nervous investors.
Well, I think it's a little bit of both. I think they do have to underpromise and overdeliver, and I think that they do need to provide reassurance because I think that there's a lot of concern right now over DeepSeek in China, but I think their CEO has already done a pretty good job of combating that, and it's really interesting the way that these CEOs are using social media these days to kind of combat a lot of this news. I noticed that happened, the date of the DeepSeek announcements. So, I'm not really concerned about that because I know that CEOs, when it comes to earnings reports, they know exactly what they need to speak to. And I think we're going to hear a lot of reassurance with that today. If we do get that reassurance, do you think that's going to lift some of those secondary AI stocks? I'm kind of talking about going down the list with an Upstart, SoundHound, a Confluent, and UiPath, all those types of names here. Is this going to be sort of a rising tide lifts all boats, or is this just NVIDIA in that leather jacket? Nvidia is absolutely a rising tide lifts all boats, and that's kind of the concern with it as well, is because if there is some major issue with it, then yes, that could be something to drag down these stocks and the NASDAQ along with it. But, as far as this report is concerned today, the thing that I always do is I look at the expected move, and that's generally how you can determine if that tide is going to lift all boats or sink them. And so, if you get 1.5 times the expected move over earnings, that's generally the point where it's going to be a little bit too much and it's going to impact other companies. And certainly if it's twice the expected move in the options market, that's where things get a little bit crazy. So for example, if it's up 20%, that would be an opportunity where you'd see a huge momentum buy.
Yep.
But down 20%, that's really where it's going to start to drag down the NASDAQ and the rest of those stocks.
All right, Danielle, thank you so much for joining us. Danielle Shay is Vice President of Options at Simpler Trading. And of course, shares of Nvidia right now are on the move, modestly higher by 0.3% as we await their earnings release in the next few minutes. Caroline Hyde, co-host of Bloomberg Technology, here with us. We were talking about how Nvidia is set to deliver another quarter in which revenue and EPS rise at least 60 to 70% from last year. But the sentiment has seen a really big shift since the DeepSeek revelation. Have we seen analysts adjust their earnings estimates in any kind of meaningful way?
Not in the long term. This is actually confusingly their fiscal 2025 that we're about to draw a close on. And when you're pointing towards their fiscal 2026, so basically this year, actually analysts thought that revenue would increase slightly in the next year compared to where the analyst expectations were before DeepSeek, before that $600 billion sell-off. So actually profitability remains pretty much same for analysts post this sudden shock to the market, and indeed revenue remained the same. Sure, as we were just hearing from the previous guest Danielle, we're going to be ticking lower. Look, we're likely to see a 73% increase in revenue for this overall full year, and then you're pointing to just a 53% increase the next year. But this is talking about almost $200 billion to be brought in by one company in a year alone in terms of revenue.
And it's a good point, too, to note that it has not even come close to recouping the losses from that DeepSeek sell-off. And just two numbers to really keep an eye on was that 142.62 level. That was the closing price on January 24th before we learned about DeepSeek. And then, of course, its all-time high back on January 6th at 149 and change. I do want to ask you, though, about the end use case. We were talking about Salesforce a little bit earlier, and this idea of the companies that are buying all these picks and shovels. Like, when are we going to start to see the ROI? And I know you had a chance to catch up a little bit earlier with Amazon. They finally have started to articulate a little bit more of an AI strategy with Alexa, and I think you're supposed to talk to the CEO tomorrow here. Are we going to see more of that end use case become apparent?
And actually, the experts we're talking to think that the administration is going to take that up and start to really talk up and incentivize you and me as consumers, as well as the enterprise, to really use these large language models and increase our productivity. Sure, Alexa Plus, finally, it's a year delayed, but finally we get the injection of generative AI within Alexa, and that's going to be dispersed among the tens of millions of products that they have. But not only will you use it with your Echo, you're going to be able to use it in an app, you're going to be able to use it on .com. So they are trying to get more generative AI into our use cases. And then you start to book more restaurants. Then you start to understand the music that you want. Yes, we start to see the return on AI, but remember, Amazon is kind of a competitor as well. The picks and shovels, they're busy trying to make their own cheaper picks and shovels with Trainium 2, for example, which is their key competitor to Nvidia's chips.
Yeah, that goes back to the idea that no one company wants to be so reliant on Nvidia, that they all have to come out and make sure that they prepare for the day that Nvidia can't deliver what they need from them and come up with their own solutions.
And just cheaper versions.
Yes.
Nvidia so owns the stack here. It owns the hardware. It also owns the software. And that's what's been so hard to basically penetrate. Look, we'll get a great story from Brody. In fact, we've got the breaking news now.
Sorry to jump in. Fourth quarter revenue beating analyst estimates. $39.3 billion. Analysts were looking for $38.25 billion. Adjusted EPS of 89 cents, a nickel higher than what was anticipated. Adjusted gross margin of 73.5% remain matching the average analyst estimate.
The company saying that its demand for Blackwell is, quote, amazing, as reasoning AI adds another scaling law, and that they're successfully ramping up a massive scale production of those Blackwell AI chips. Of course, it's a successor to Hopper, and there's going to be a big question, and I posed this earlier, Scarlett, to Ian King, this idea, and I'll pose this to you, Caroline, this idea of whether this is going to be about adoption by new NVIDIA customers, or is this going to be existing NVIDIA customers upgrading to the new chips? And if so, like, how much of an impact is that going to have?
And will Wolf Research put out a note saying they don't think there's going to be a sort of air pocket created by the transition from Hopper to Blackwell. And in fact, we saw demand for Hopper increase when perhaps there was a sluggishness in getting Blackwell out into people's hands. It's notable that Jensen is currently saying we have successfully ramped up the massive scale production of Blackwell AI supercomputers, achieving billions of dollars in sales in the first quarter. They're trying to articulate here how much money they're making on a quarterly basis. But I also like the way he talks about scaling laws and it being advanced by the fact that you've got this compute and this reasoning.
Then why don't we see more of a shift in that forecast? I mean, $43 billion in revenue is what they're predicting for the first quarter, Scarlett, for their fourth quarter, plus or minus 2%, which means if they miss that, that would be below the average of street estimates, which is 42.3.
Yeah, it feels very conservative. And that's a really good point. What happened to the manufacturing constraints that Nvidia had telegraphed in previous quarters?
I think for many, they knew that they were working this through, and this is very typical. It's just that never have we all waited with bated breath on the exact dates that the latest and greatest supercomputer is going to be out the door. I think it is notable that Nvidia is falling pretty hard now, down some 3.9%, so erasing today's gains if you're looking at the after-hours market action. So I wonder if people are trying to think, okay, that forecast is a little bit conservative for our liking. What does it mean about getting the ramp up in the Blackwell offering more broadly? But these are the sort of transition issues that you have when you have suddenly chips being made on an annual basis. They're almost like an Apple now rather than a chip maker.
Yeah, Caroline Hyde, of course, the co-host of Bloomberg Technologies. Just to recap those earnings that just crossed the wire, Nvidia for the most recent quarter did see a 78% jump in revenue to about $39.3 billion. Data center revenue almost doubling. Gaming revenue was down, if you still care about that, down about 14%. Of course, a much smaller part of the business. But here are two key numbers here. The first quarter fiscal first quarter revenue numbers, they're saying they're looking at about $43 billion in revenue, plus or minus 2%. The street came into this expecting $42.3 billion. So if they hit the minus on that, of course, that would be below street estimates. But also margins, Scarlett. I thought this was interesting. They're actually saying that their adjusted gross margin for the first quarter will now be 70.5% to 71.5%. That's below street estimates of 72.1% and below previous margins that they had closer to 75%. Look, I would be more than happy with the 70% margin on anything.
That's pretty incredible.
But when you're a high flyer like this, I mean, that has to give you some concern about the trajectory.
Absolutely. For a hardware company to have that kind of margins is out of this world. But I think it goes back to that idea that perhaps expectations have shifted in the larger market. Sentiment has definitely soured. And what's the upside for Nvidia being too bullish in its promises as opposed to being really conservative and guiding lower?
Let's pose that question to Gil Luria, head of technology research at D.A. Davidson. He's got a neutral on the shares at a 135 price target. Gil, what jumped out at you?
The balance that you've been pointing to, which is the revenue results are very good. As we know, their biggest customers spent a lot on CapEx in the fourth quarter and are going to continue to spend. So we had the upside on revenue and in terms of guidance for the April quarter. But the gross margins were lower, and it's what Caroline was pointing to. When you have a product transition every year and you're ramping up production of a new product, it comes in at lower gross margins. And that's still happening to them. So they guided to gross margins below expectations for next quarter, indicating they are still getting lower margins on that Blackwell product line. So we had the least anticipated result for this earning, which is the stock could be flat tomorrow, not up 10%, not down 10%.
Yeah, and the stock has been oscillating between gains and losses. And Gil, I just want to bring to you another headline here. The company breaking out sales for those Blackwell chips, saying it accounted for about $11 billion of its revenue in the most recent quarter. Of course, again, we're talking about $40 billion in revenue total, so a bit more here than a quarter of total revenue. Nvidia also saying, Gil, that this is the fastest product ramp up in the company's history. Talk to me about that $11 billion revenue number for the Blackwell architecture. Are you happy enough with that?
Well, that's a little better than they guided to last quarter, but it does indicate then the sales of the rest of their products declined quarter over quarter. None of that matters. Their customers are going to buy whatever NVIDIA is selling. Their customers right now have more demand than NVIDIA can supply, and it's going to take at least a couple of more quarters for that to catch up. That's why we still are going to have a $4 billion incremental growth into the April quarter from this quarter, because they still haven't caught up to demand. It does look like Microsoft and Amazon on their earnings call talked about catching up in terms of the supply of chips that they're ordering by the middle of the year. So it's more the back half of the year that we're going to have to see if demand materializes. And it's very important that you made the connection to Salesforce. If companies like Salesforce don't see an acceleration of revenue based on AI, then it's going to be very hard to justify continuing the rate of investment in CapEx that we've seen the last couple of years.
I want to go back to that gross margin number for the first quarter, coming in lower than expected, and that idea that this is just the price of getting new products to market and they will start to widen again. Is this the air pocket that so many people were worried about?
It's not an air pocket because it's actually the second or third quarter in a row where gross margins were the soft spot in the results. And if they're still guiding for them to decline as the new product line takes over from the previous product line, then it's more of a concern. It's less of an air pocket.
Okay. Gil, quick question here on what Jensen Huang will likely say on the earnings call. Do you expect to get any clarity on what sales to Chinese customers might look like, given that the Trump administration is thinking about beefing up the current restrictions on sales to China?
Yeah, that question will come up. It's unclear if Jensen Huang's going to answer it, but it is the huge question right now. What did he promise President Trump when he visited him at the White House? President Trump, this administration is worried about China taking the lead in AI. The only way China can take the lead in AI is if they continue to have access to Nvidia chips. What did President Trump ask Jensen Huang to do in order to prevent that from happening? And what is President Trump and this administration going to carry out in terms of regulation to prevent these chips from getting to China? Mr. Huang's going to get asked about that during the call. It's unclear what he'll be able to say.
All right, Gil Luria, really appreciate your giving us your instant analysis on Nvidia. The share is currently marginally lower by 1/5%. Gil is head of technology research at D.A. Davidson.
All right, let's keep the conversation going here and bring in Andrew Ng, of course, a pioneer in this space who actually helped to sort of lead that whole Google team that helped to develop a lot of these AI models. And now, of course, he's a partner, managing general partner over at the AI Fund. And Andrew, I do want to ask you here about the technology underpinning this and some of the attempts that we know are going on right now to provide a formidable competitor to Nvidia and specifically to these next generation Blackwell chips. Is this something that is in the near future, or is this still a long way off?
I think that Nvidia has formidable competitors, including AMD and hyperscalers, many of which have very sophisticated offerings. Fortunately, Nvidia's been able to run so fast that I don't know that anyone has fully caught up to them yet, but the next period of time will be very dynamic. One of Nvidia's moat has been the CUDA programming language, but with AI now writing more codes, there are actually questions about how strong that moat is. So it'll be a very dynamic period to come.
We came into this earnings report, Andrew, with a lot of concerns about what we learned out of DeepSeek a couple of months ago, or maybe what we didn't learn. And that's really, if we want to take them for what they said, how they were able to achieve what they achieved at a considerably less cost than what some of the other bigger counterparts had been doing. I am curious as to, even if it does prove that DeepSeek might have used NVIDIA chips, is there a case to be made that you can do some of this stuff with, I guess, the less costly and less powerful chips?
One thing that's been happening for years now is the cost of training these very large AI models called foundation models has been falling rapidly year after year. I've seen some estimates that maybe the cost falls by like 80% year on year or something like that. The surprise with DeepSeek was this time it was a Chinese company driving that next wave of cost reduction. And there are discussions about, they report like a $6 million number. There's a lot of R&D costs. It's just a final training run cost. But I think that with its inventions, China is actually probably ahead of the US right now in the release of open source software. So I hope the US accelerates our efforts in developing and releasing open source as well, which is becoming a critical part of the supply chain for AI, building AI applications.
Yeah, of course, DeepSeek's success raises a lot of lingering questions that are kind of unanswerable at the moment about how NVIDIA adapts to a world in which AI is not as computationally intense as it currently is. What does that world look like in terms of the supply chain and the end user? Let's start with the supply chain first.
So, it's interesting. I think for the AI stack, right, there's a semiconductor layer, the cloud layer, the AI foundation model layer, then the application layer. I really pay a lot of attention to the application layer because ultimately it will be the application layer that's got to generate enough revenue to pay all of these suppliers down below, all of these infrastructure builders. In terms of supply chain, I know you were just chatting about the U.S. chip export controls with regard to China a moment ago. I frankly worry about that. Our export controls have been quite leaky. So despite considerable efforts, China is making rapid progress. And what we've done as a nation is incentivize China to really double down on its own semiconductor efforts. And if the U.S., if we don't get our act together to make sure that our TSMC plant, say in Arizona, grows rapidly, I worry if it creates a dangerous moment in time where if a few years from now, China is, because of us, has advanced semiconductor capabilities and we're heavily reliant on Taiwan, then that geopolitical situation and peace, across the Taiwan Strait, a lot of questions come to that if ever China decides to take action in Taiwan that damages the U.S. much more than China, because asymmetrically, the U.S. relies much more on Taiwan than China does.
What role does Nvidia have to play in that? I mean, Gil Luria was just telling us that we don't know what President Trump talked to Jensen Huang about. We don't know what Jensen Huang might have promised President Trump.
I don't know either. If I find out, I guess we should ask Jensen or President Trump that question. But I worry if we are. I feel like 2 years ago, the U.S. was significantly ahead of China in AI, generative AI, shortly after ChatGPT was released. In the last 2 years, we've seen China really catch up. DeepSeek was just one thing, but with open source release, with open weights models released just the last week, it looks like China may be ahead of the U.S. in video generation. I think that China is doing very well in analyzing images. So I think the US is still ahead a bit in reasoning models, with some of OpenAI's models probably better than R1. But China is much closer to parity, in the US and compared to the US in many dimensions. And I really question if export controls will continue to be effective or just, even more so incentivize China to build up its own supply chain.
Well, that raises a question, and maybe you can't answer this because this is probably a little bit more political, but is there any sort of opportunity for greater cooperation amongst the various countries, particularly China and the U.S., and not just at the government level, but obviously at the academic level and at the corporate level?
So what I see at the academic level is that researchers actually share ideas surprisingly freely. If you go to academic conferences in AI, English is usually by far the most spoken language in the hallways, and Mandarin Chinese is the second most spoken language, and researchers actually share ideas really freely. I think business cooperation has splintered because of the geopolitical tensions, and governments are up to the government debates. I find that if we look back in history, even during, say, the Second World War, when Britain and Germany were bombing each other, there was still room for cooperation. So despite very high geopolitical tensions, I think that there could be room for cooperations in ways that are win-win for both nations.
I am curious, so in your current role, and I think when we introduced you, I think I misspoke a little bit. You're at the Google Brain team, but I am curious, in your current role over at the AI Fund, what are you talking to your companies about, your entrepreneurs about, with regards to not just adoption of AI, but how to actually utilize it in a way that's going to be not just beneficial, but cost effective as well?
Yeah, that's a great question. I think there's so many wonderful application opportunities because others, Nvidia and many hyperscalers and the foundation model companies, have invested so many billions of dollars to create these wonderful AI models that all of us can access for pennies or tens of cents. There are so many exciting opportunities to build AI-powered recruiters and AI legal document screeners and maybe AI doctors and AI educational teaching assistants and so on. And I think that for businesses, it will actually take a long time to identify all the use cases and build to them. One thing I'm seeing for the business leaders watching this, one piece of advice, I'm seeing a lot of smart business leaders rethink their data architecture, for example, because it turns out that if you can get the data to where it needs to go, AI can now make sense of it in a way that just wasn't possible a couple of years ago. So I'm seeing a lot of businesses kind of rethink the data infrastructure to let internal teams get access to data all over the place, to build prototypes rapidly, to test out new ideas and launch new products. So that velocity of innovation is really fantastic.
That sounds great, but until we get to that point, will data centers maintain their hegemony in delivering AI technology?
Boy, hegemony is an interesting word. I feel like there is a lot of efficiency in data centers. It turns out one of the best things almost anyone can do is move your workload to the data centers, because many data centers are architected to use, wind, solar, and batteries, and there's just a lot of efficiency in how data centers are run. But to most of us, to everyone that's not operating a data center and not trying to compete with OpenAI or Anthropic or Nvidia, this is a fantastic opportunity to use these really inexpensive to us kinds of tools to build applications. That's the good news. The bad news is, even though there's a lot of hype about super intelligent AI could do so many things, I think that's really hype. I think the reality is a decade from now, businesses, CTOs, CAIOs, CDOs will still be trying to figure out, boy, with this amazing technology, what are the use cases I want to adapt to my enterprise, and how do I prototype and get that done?
As we said, a lot of unanswerable questions, at least for the moment. Andrew, I really appreciate your joining us. Andrew Ng is Managing General Partner of AI Fund. Now, Nvidia shares currently lower by 1% after hours trading. Its earnings release comes almost exactly a month after the emergence of DeepSeek challenged the outlook for AI infrastructure, making these results pretty crucial for the chipmaker and the broader market as everyone attempts to see some kind of climb back following the deep losses in the wake of the DeepSeek revelation. For more, let's bring in an investor in Nvidia. His fund owns shares in the stock. He is Doug Clinton, founder and CEO of Intelligent Alpha. And Doug, you had said that given that all the hyperscalers, OpenAI, Anthropic, have pretty much kept to their spending commitments when it comes to building out their AI infrastructure, it's unlikely that Nvidia is going to see much of a change in demand for now. So what does NVIDIA's results really tell us about the AI trade at the moment?
Scarlett, I think it tells us that the trade is still intact. And there was certainly some doubt, I think, over the past week. I mean, it's been a rough week to be a growth investor, to say the least. But I think these results, even though NVIDIA is sort of vacillating between up and down a little bit here in the aftermarkets, I think it tells us that the spending is intact. There were no bombshells, at least in the release, that indicated that there was any sort of slowing or indication even of slowing from the hyperscalers. And I think that was probably the biggest thing investors wanted to know. Now we'll get to the call, and obviously we'll get some questions directly to Jensen and his team about that very issue. But I think they'll probably say the same thing, which is that the spending and the demand is still happening as we expect.
And how are you interpreting the outlook that NVIDIA is offering? First quarter revenue, $43 billion plus or minus 2%. Analysts were looking for about $42.3 billion. What's the calculus here that Jensen Huang is, going through as he kind of frames what his outlook is to a very nervous investor base?
Yeah. Nervous is the right word. I think that the $42 billion, that guidance, it was actually slightly better than I would have thought would have been kind of the hurdle for investors. I think something even in line-ish would have been okay here. And we got about a 2% guide up. It was actually a bigger guide up than we had last quarter. And so I think the bottom line is we have Blackwell demand, which they mentioned, kind of surging. That's becoming a bigger and bigger part of the products they're delivering. They mentioned specifically Microsoft, Google, Amazon, other customers, but I think Microsoft is key as customers of Blackwell. They're shipping to them. And so I think the story around that guidance is, look, this is what we've tended to do. We've been able to guide up a little bit relative to street expectations. This was a little bit of a better guide than last quarter. And so back to what we said before, I think the trade is still intact.
Is the trade might be intact. Do you think we're going to see that same type of enthusiasm? Are people sort of looking elsewhere beyond NVIDIA, meaning they're still committed to the AI trade, but maybe thinking, okay, at this valuation, maybe this is about all we're going to get?
I think that is the right question, Romain, because if you think about this last week and everybody sort of worrying about NVIDIA leading up to what we learned here just a few minutes ago, I think that was all about the fundamental sort of release that everybody was looking for. Can we make sure that at least the numbers, the demand, the money is still intact? And I think we did get that. Your question, though, I think speaks to something different, which is what about the emotional side? Because there's always an emotional component in investing. At Intelligent Alpha, we use AI to make our investment decisions. So we're trying to get away from that emotion. Mm-hmm. But I think that piece of this trade is probably still the thing that's in question. Now, if NVIDIA totally blew these numbers out and they guided up by 5 to 10%, maybe the emotion would have roared back. My guess here is that it will take some time probably still to get that emotional component back. And I'll give you just one quick interesting data point. Mm-hmm. If you go back to the .com era, when we had these 10%-ish corrections in the NASDAQ during the dot-com boom, it took on average about 50 days for us to go back to the prior high. Now, we haven't hit a 10% correction here, and the range in those pullbacks to back to the prior peaks was about 20 to 90 days. But I think we should be patient and realize it's probably going to take a few weeks if we do start roaring back before investors get that emotional component.
As we try to kind of suss out the AI spend and whether it's going to flow to Nvidia or to other companies, I am curious about kind of breaking out what this is being used for. And I don't want to get too into the weeds, but a lot of what people have been buying these chips for are to train new models. There's been a lot of talk about inference, which is just kind of a fancy word for saying what you do after that model's been trained, basically keeping it up and running and developing it further here. There's been a lot of talk that you don't necessarily need in the power of an Nvidia Blackwell to do that inference in the same way that maybe you need to do it on the training side. Does that make sense, or do I have that wrong?
No, it does. And I think that there is some truth to that. And I actually think this inference question is probably going to be a big topic on the call later tonight in terms of just how does NVIDIA think about its position in this stack. They've talked about kind of three opportunities where their chips can play. Pre-training, as you mentioned, that's probably the biggest piece that we've thought about for their demand. Then there's a process called post-training. So after you sort of do your initial model creation, you refine it a little bit. You use chips in that process too. And then there's the inference at the end, which is sort of the ongoing usage. I still think there are efficiency advantages to NVIDIA chips. And because these hyperscalers and other big customers are building out these big data centers to do the training, it's easy for them to just flip those data centers over to inference workloads. That might be the big part of the story, but I think that's a question they'll focus on in this earnings call.
Before we let you go, Doug, we should mention that Salesforce is one of the big decliners in after-hours trade, very actively traded, currently down about 3.4% after the company reported earnings with a weak growth outlook. That raises some questions about the demand and the use of its AI tools. This is not a great vote of confidence for that AI trade, which you were telling us is intact.
You know, I think there's a dichotomy in the market a little bit where we have some of these large enterprise-focused customers where they're still trying to figure out, to Andrew Ng's mention a few minutes ago, what are the right use cases for the enterprise? And I'm on the board of a company called Invisible. We help these large model companies like OpenAI, like Google, train their models. We also work with Fortune 500 companies. And the problem that they're having is they just can't figure out the right use case. And so as it pertains to Salesforce, I don't know that that's necessarily a knock on the potential of AI. I think it's that Salesforce maybe hasn't figured out how to present the right use cases. I would actually look to the private markets to justify the AI spend. You look at a company like Cursor AI, which is a sort of a programming assistant. They've went from 0 to $100 million in annual revenue in less than a year. I think that's a really good signal of demand. And there's dozens of startups like that we could talk about.
All right, Doug, we're going to have to leave it there. We'll talk to you again soon, I'm sure. Doug Clinton is the founder and CEO over at Intelligent Alpha, also, of course, one of the founding partners over there at Deepwater here. As we keep an eye on NVIDIA, we were expecting an up or down move, Scarlett, of about 10%. We're not getting that, at least not now.
No, it feels very ho-hum, but of course, our earnings call hasn't begun yet. So more details to come. Right now, I can see NVIDIA shares down about 1%, positively unchanged given the kinds of expectations people had. Here's how the rest of the Mag 7s are trading. Microsoft building on today's gain, which ended a 3-day losing streak. Remember, there was a report that Microsoft is perhaps delaying and pulling back on its data center construction.
Yeah, and it's kind of interesting, too. I mean, you look at these moves, and I mean, these are fractional to the full hilt here. And it raises a question here about what this means for the broader market tomorrow. A lot of people were looking for NVIDIA to maybe potentially be that upside catalyst. It's not going to do that with a 0.9% move, either up or down. And even with Microsoft up 0.2% or whatever it was, that's not going to be enough to move the market as well. Alphabet, you see Tesla, Meta. I mean, these are the big daddies. I mean, they're supposed to be leading the charge. And I know they haven't really led the charge for a few months now, but it doesn't look like this is going to start tomorrow unless something really changes on that conference call.
You know, we do have a core PCE, so I think that'll be the big mover for tomorrow.
All right, we continue our coverage here of those NVIDIA earnings and everything AI surrounding it. And our next guest says AI isn't just about chasing trends. It's a lot more than that. It's about embedding practical solutions with long-term impacts into everyday operations. John McNeil wears many hats. He's the co-founder of DVX Ventures. He's also the co-founder of the ETF manager Vista Shares and the former president of Tesla. All right, John, let's talk about, I guess, some of the real-world applications. Forgive me for being pedantic or naive, But are these real-world advantages actually there yet?
Yeah, we're seeing this emerge already, not only in the AI infrastructure, which we've talked about before. I think the Nvidia is a signal for a broader AI infrastructure market that's really expanding rapidly. And as you point out, that's not only expanding to train foundational models, but it's really now expanding on the use of those models. So in terms of the practical things that we see in our daily lives, we've launched a company called Domify that does the very boring work of compliance and in financial services companies and registered brokers. That has typically historically done rotely by a lot of humans and now can really be mastered by AI. We've got another company called Self-Inspection, which is doing another very practical thing, which is you can imagine turning in a rental car. Humans used to look at those rental cars and check off on paper where the damage was. Now they just walk around with a phone, and the phone actually analyzes the car for damage. And that's using the inference chip really on the phone. And so there are practical solutions that are rolling out. And I think that's what's driving a lot of this investment in AI infrastructure that we see in our own AI infrastructure fund, AIS. And you'll see that, I think, on the call, because I'm sure analysts are going to ask Jensen, how much of the revenue is now coming from inference? And that's been a growing and a significant number of the, in terms of the percentage of revenues in Nvidia over the last 4 or 5 quarters.
I'm glad you point that up, and I thank you for the rental car thing, because somebody who just had a very poor rental car experience last week, I would definitely like to see a little bit more of that. But it raises a question too. I mean, when we saw Salesforce earnings, I mean, this is the whole thing when they talk about agent AI, basically how to take those boring processes and take the human intervention out of it, and hopefully save some money in the process here. Are companies adopting that, though, in scale, or are they still just kind of in that test and tinkering phase?
What we're finding is companies are adopting, but they're adopting, as your prior guest said, really from other private or from private companies. So rather than using a generic tool from a large platform like Salesforce, they're using very specific tools like Cursor AI in coding, as was mentioned earlier, and in our case, like Domify for compliance. And what they're finding is they can leverage external companies with specific expertise to solve their problem. And that means they don't have to hire up with AI experts internally to solve a problem that others are solving. And so you get the leverage of every financial institution, rather than working on compliance on their own, is able to go to a company like a Domify and get a solution in place very rapidly that's very specific. And so I think we're going to see more traction in the smaller private companies for now that are really focused on these issues, probably more than the large platforms that are offering more generic tools that companies, to your point, sort of have to figure out how to use on their own.
That's a good point. And it reminds us of how limited investors in public equities might be when they want to bet on the AI trade overall. I want to bring it back to Nvidia for a moment, because you think about Nvidia's role and how it's kind of been at the forefront of so many technological trends, whether it's video games and then Bitcoin and now AI. What is its next innovation beyond chips? And what might that look like? Do we have any idea?
I think when you look at the chart of Nvidia's revenue source, it's very different than it was 10 or 15 years ago, where gaming was the majority of the revenues. Now gaming is a very small slice of those revenues. And I think we're going to see more and more, as I said, inference here. But I think we all have to keep in mind that Nvidia is a slice, but it's not the whole pie. The whole pie that we ought to be looking at is AI infrastructure. And when you look at the build sheet of an AI data center, it's very different. You've got 4 times the fiber optic cables that you would see in a normal data center. You've got things like fiber optic substrates, cooling systems, energy systems, and networking software. And so although NVIDIA is important, there's a whole range of companies. We've got more than 60 public stocks in our ETF that are in the infrastructure space that NVIDIA is a signal on where things are heading, which is up. But it's not the entire slice, and for that reason, NVIDIA only represents about 3% of our holdings in our ETF, because there are so many other companies that are providing really the picks and the hammers and the ladders for the AI infrastructure.
So as someone who invests in AI infrastructure, what do you want to hear from Jensen Huang that would provide some clarity for you in terms of how he sees things developing?
I would like to see how much they're thinking about inference. I know they are because with my experience in autos at GM, they're really focused on inference in autos and selling auto companies chips to do things like autonomous driving and assisted driving. And so I do want to hear more of the story of where they're seeing the inference market headed and what NVIDIA's advantage is in that inference market versus some of the other chip makers who are now coming fast and as furiously as they can towards that opportunity.
Yeah, John, just a real quick question, though, too, and this is the last one. Specifically with regards to what you're investing in on the public side, I guess through Vista shares, are you starting to see a little bit more of a weighting to non-U.S. companies?
It's a really good question, and we are seeing more and more international stocks in our bucket, largely because it's easy to forget that the U.S. isn't the only market that is building AI data centers. These are being built around the world. And there are a number of very important players that are non-U.S. In this stack. So it's an excellent question, Romain. And I think we're going to see more non-U.S. companies making up a bigger chunk of these indices.
All right, great stuff. John, really appreciate your joining us. John McNeil is co-founder of DVX Ventures. Now, NVIDIA's technology bringing a surge in sales to companies like Dell, Hewlett-Packard Enterprise, as well as Supermicro Computer. However, it's been coming at a cost. Here now to discuss is Bloomberg's Jackie Davalos. Jackie, explain what that cost is.
These aren't the sexy names in AI right now, Scarlett, but it's an important part of the infrastructure puzzle. And they're not really getting a good deal despite a lot of the demand that they're getting, which is largely being driven by Nvidia. Nvidia is a key partner to some of these players like Dell, HPE, Supermicro. And what's happening is that Nvidia really controls aspects of the relationship that, make it more difficult for these partners to actually make more margins. It's already a pretty low margin business. AI servers, they make mid to single digits. And so when they're trying to get into, other areas that they can bundle services like networking or storage, they find Nvidia also starting to compete for the same product. So not only is Nvidia a little bit picky about the specifications, they're also working on their timing, which makes this relationship pretty difficult despite Nvidia being a boon for their business.
Well, that's what I'm curious at how they adjust. And I think we hear from Dell tomorrow after the bell. And I think some of the other companies, we have to wait till next week here. But what are they going to say here about that adjustment factor, Jackie, how they adjust to some of those issues?
They don't really have a lot of choice. And so I think what analysts and investors are going to be looking for is what incremental improvements are you making for those margins in that AI server business? Because if this is going to be a longer term strategy, a longer term pipeline of revenue, even Dell has said, we're grateful for the revenue, but have acknowledged that they're not really making that many profits off of this unit. So you're going to see that, but also how they're expanding perhaps some of their other offerings that they're seeing Nvidia also compete for.
So take us forward by 6 months to a year. Do you expect the conditions to remain the same, or how do you think that they might shift in response to the changing environment?
I think that depends on NVIDIA's fortunes in many ways. As NVIDIA starts to see more competition from other chip makers, perhaps some of these partnerships are going to be renegotiated. I think it's too soon to tell at the moment, but the more options that these server makers have to play around with, I think the better the deal conditions will be for them going forward.
All right, Jackie Davalos out there in San Francisco here. A closer look here at another angle on the Nvidia trade. And of course, Scarlett, that has to do with companies like Dell and Hewlett-Packard Enterprises, and which of course have also sort of been boosted by this big, mostly from the data center part of this endeavor.
Everyone's looking for another way to get in on the AI trade. And if it means looking at some names that have been long ignored and probably trade at lower valuations than the obvious big players like an Nvidia, people go into it.
But then you heard what John said, that in his view, some of the best trades, unfortunately, aren't actually tradable because they're still private companies.
Exactly.
So that's another issue, too. And in fact, if you go down that list of those AI names that are benefiting here, a lot of them are in the private space.
And they don't need the cash. They don't need to go public.
And they don't have that kind of public pressure, too, to kind of show and prove every single quarter. They can kind of do those things. We should point out we are waiting to hear from Jensen Huang himself. That conference call is set to kick off 2 p.m. Pacific time. That's 5 p.m. here in New York, so just about 5 minutes here. I mean, what do you think how do you think the market could potentially react to this? Obviously, we don't know what Jensen's going to say, but based on what we know now, is this just going to be a dud tomorrow?
It may very well be. It's people want to see how this all plays out. We know that Blackwell is ramping up. It's going to take some time to see whether the growth rate maybe stabilizes and starts picking up again. It's decelerating for sure. We're still looking at big numbers when you're talking about growth rate. 70% is nothing to frown
I know
at.
it's kind of funny how we poo-poo 70% revenue growth rate.
But it's come down from 123%. So.
Yeah. Well, believe it or not, when we look ahead to the next 24 hours, it's not all about Nvidia. There are actually quite a few other things that could potentially move the markets, including some earnings before the bell, Scarlett.
Warner Brothers Discovery and Penn Entertainment, as well as James Smucker, will be giving us a read on the consumer, whether people are still willing to pay for their streaming packages.
And then after market, we do get a little bit more in that tech space. We talked about Dell just a little bit earlier. HP Inc. is set to report as well. Autodesk could be interesting. And then we get a few others like Monster Beverage.
Monster Beverage, Duolingo, and Archer Aviation. And by the way, we've got the Archer Aviation CEO who will be joining us tomorrow in the 4 o'clock hour, Adam Goldstein, on the close.
And that's very timely, of course, given some of the aviation incidents that we've had here in the United States. We do get some economic data, including durable goods.
Durable goods and jobless claims, of course, durable goods is, tends to be volatile. There's also the second read of fourth quarter GDP coming out at 8:30.
We also have an interview tomorrow with the CEO of Amazon, Andy Jassy. That will be at 11 a.m. Eastern time. And well, right here in politics.
Yeah, Keir Starmer, the UK Prime Minister, will be meeting Trump at the White House.
And I'm sure the Balance of Power team will have some more details on that. Stick around. This is Bloomberg.